Now I'm going to give you the reason for it. We have significant gap data. Significant gap data on the VIX. So I need to bring that chart over to show you what that is. Okay, so give me just a second. Alright, hopefully you can see these green lines on the VIX, 7-tick VIX bar. These gaps that go all the way down to 2510, some of these should get hit. I can't say whether they will all get hit, but eventually they will. In any case, to fill the gap at 2522 or at 2515 or 2510, to fill those gaps, VIX has to move down. For it to move down, another 0.2 of a point, roughly, should be sufficient enough for us to hit the resistance level at 72.25. So that's one reason. Now there's a few other reasons. Now here's another. Here's our divergence. This is our divergence chart. And you see what's happening here. Just as we had before, remember the horizontal lines that we talked about? We're getting gaps preceding divergence here at 71.50. We had gaps preceding divergence. Gaps before divergence is a very accurate indicator of a potential high. Alright? So we were divergent in respect to all of our data. We have yellow bars, red bars, magenta bars, all of that indicates divergence on the VIX, the AD, as well as the ES. And, okay, when that divergence emerges and you've got gaps below, generally the market will pull back. Now we can't be precise from just watching this as to where the market will begin to drop. But we've got several things here that are suggesting that this is at least temporarily a top. I still think we're going up to fill the 72.25 resistance line, but we've got trouble here. So at least at the moment, we've hit a high. This is likely going to come down, but I think we'll still be able to go back up. And then once we do, this thing will begin to short one more time into the low of the day. Now, let's review. We have gaps before divergence. That's bearish. That's very bearish. Even though we've got gaps below where the VIX was, at the moment, we've hit some sort of a top. We're going to now take a look at one of our other charts where we've just momentarily gone from red to green and back to red. That also indicates a top. And And see how the market's pulling back here. We're going to fill those gaps that we saw on the divergence chart. There's a top. So she's shorted. And that's about all I see. So, having pulled a long trade back at the last pivot, moving up to this particular point at 71.50 would be a logical reason to exit the long trade, regardless of the fact that you've got a resistance line at 72.25. You had logical reasons to pull that trade at that point, which was a good move. I mean, you know, that was, what did we say? We started calling long at what, around 68.25. You still had 12 ticks. That's not bad at all. That's not bad. Okay. So if we're able to move all the way up, wonderful. But you had a logical reason there. Now the more risky thing to do was to hold it and not get faked out. And the reason, because of the gaps on the VIX. Okay, there were 4 gaps on the VIX. And it takes a little bit more guts to believe they're going to get filled, but you watch. So what I'm trying to say here is that yes, you had a logical reason to say, I don't want to go any further. But a little more discernment with respect to the VIX suggests, no, not yet. Not yet. We're going to fill those gaps, at least some of them. And that takes us back up to 72.25. So that's the way I would play the game. Okay. So in the meantime, what I'm going to do here is try to get a little better resolution on the blue dot gap fill. So I'm going to put us on pause for just a second. Whenever we reset our indicators, we lose the historical colors of our bars. Now, what you see here, what I'm just showing you here, is that we have that resistance level at 72.25, and we've got these support lines back here at 67.50, 66.75. So there is reason to anticipate once again the drop in the market. Okay, so now we're going right up to the 72.25